Study Objective 4 introduces us to all of the detail found in an income statement for a merchandising company. You will want to study illustration 5-11 very carefully because you will need to know how to put together a big full income statement. I'd recommend focusing on the major sections and major line items that are shown in red as a guide for the flow of information through a big income statement. I may even ask you multiple choice questions on a test related to the relationships of these amounts. For example, I could ask sales minus the returns and the discounts equals what? Or net sales minus cost of goods sold equals what? Or gross profit minus operating expenses equals what? So you'll need to be very familiar with how the information flows through the income statement and the interrelationships that you see here. Now also in this study objective, your authors point out that while management may be interested in all of the detail shown in this income statement, when the information is presented to the public in an annual report, they are typically going to be condensing this. These income statements, you see, could be a lot bigger than what we see here. Many companies for operating expenses may have dozens and dozens of those. And so if the company tried to show all of its income statement accounts in an annual report, it would be huge. There are two ways that a company condenses its income statement. And I've created a fictitious company here to demonstrate the two different ways. The first way is to have a condensed multiple-step income statement, and the second is a condensed single-step. With the multiple-step version, all of the detail in the big income statement shown in illustration 5-11, all that detail is left out, but the main pieces still appear in the same order that they would appear in the big full income statement. So notice the same flow of information. The net sales minus cost of goods sold is gross profit, minus operating expenses is income from operations, and so on. So all you're looking at are the key line items from that big full income statement. In a single step version, you still have the same pieces, but they're going to be rearranged so that rather than seeing a series of subtractions coming down the income statement, you see all the revenues brought to the top, and then in one big single subtraction, you'll be subtracting away the total of all the expenses. So the name single step income statement is because in one single step you are subtracting all of the expenses, rather than a series of subtractions as we see in the multiple step version. What are the benefits of each, and how do companies decide which version they want to show in their annual report? Well, the benefit of a single step income statement is truly just the simplicity. Most stockholders can understand total revenues minus total expenses equals net income. It's very easy to look at, very easy to understand. The multiple step shown at the top is certainly a little more involved. However, the benefit here is that there are a couple of key line items which interested people are very glad to see. For example, gross profit. Now you can see what kind of markup the company has from selling its product. Another key line item on the multiple step income statement is income from operations. That's another line item that simply is missing from the single step version. So someday when you guys are running your own company, you'll have to make a decision. Do you want to have a multiple step or single step? All the detail certainly is beneficial in a multi-step, but some stockholders prefer the more simple view.